Okay, everybody, it's me, Gregory Mannarino. You and me together again at last. I love this part. So let's do this. Well, first of all, it seems like a lot of you got a kick out of that drag racing video I put out yesterday. I took my Hellcat to the drag strip here in Las Vegas. Ran pretty well. Did a best time of 11:81 at 117. I cut a nice light. I've always been good off the line. I did a lot of racing in my day. Anyway, so once in a while I'll post some drag racing videos for all of you that appreciate that kind of stuff. But with that said, let's get back to work. Okay, we're gonna have a very, very interesting week, and I want to sum this all up. What's going on? Where we are going? And as usual, what I would like to do with this segment of Markets to Look Ahead is look back first. Okay, let's take a look at what this market's been doing. Record high, record high, record high with every single dip. I mean, if you want to even call them that. Every time the stock market falls, it gets bought up. This mechanism is going to remain in place. Now, I know there's all this talk about September. Even some Wall Street banks are talking about September. Like there's some kind of an event that's going to occur in September that's going to hit this market. Let's talk about that real quick. Let's just say if this market drops in September, only a few weeks away here, so freaking what? The market needs to drop, in my view. It's gone practically straight up. We've had 6 or 7 straight months of gains with regard to this market. It's not normal. It's not normal for this market not to give back a little bit. And do you think for a moment, gauging on what you've already seen, that dip is not going to get bought? Market drops, market corrections are a normal part of the way markets function. Most of you know that who follow this blog. And what happens is, you get the correction and you find a new floor. It sets up for a new leg higher. And that's exactly what's going to happen here. What can we count on, people? The abysmal economic news is going to keep coming. Okay, that right there is stock market positive. Debts and deficits are going to hyper balloon beyond what we're seeing now. That is stock market positive. When you have a central bank that's essentially and literally buying it all, okay? You know the mechanism here. Issuing debt through one door, buying it back through another door. It gives the stock market a boost of nitrous oxide, like you would in a race car. And that's what's going on here. Period. You know all that. It's not real. This market and asset prices in general, we'll talk more about that in a second here. There's no price discovery anymore. There's no mechanism here that's allowing a fair value to occur. And I'm talking about across the spectrum, not just the stock market, not just associated derivatives. I'm talking about precious metals, of course, cryptocurrencies as well, crude oil, commodities, all of it. If you can understand the mechanism, and I think most of you do, the driving force here is suppressed rates. Suppressed rates are an amazing mechanism here. By doing this, by the Federal Reserve artificially suppressing rates now since the meltdown of '08, okay, what this does is foster an environment of risk by design. That's what it's designed to do. In other words, it pushes cash away from certain types of assets and forces it into the stock market because investors are looking for yield. They're looking for a way to grow their capital. You can't be in a debt unit with suppressed rates. If you're in a debt unit like a bond right now, you are guaranteed to lose money. What kind of an imbecile would do that? Okay. Oh, I'm going to buy a 10-year yield that's earning nothing, actually in the negative. If you base that against the actual rate of inflation, you got to be a moron of the highest possible order. And I mean that, to be invested in a debt unit right now. The game is on with regard to the stock market. It's risk on deliberately. Henceforth, quantitative easing, forcing cash into risk assets, robbing the middle class blind, or anyone with an interest earning account. I don't even care if it's a high yield account. So this mechanism here is not going to stop. And the Fed is not going to taper, is not going to stop what they're doing. I mean, people, look, I know that we heard from the vice chair of the Fed, Clarita, last week, and he said, 2023, it's not going to happen. The Fed's going to move goalposts, and the market knows that. The market knows that. I consider myself a major player in this market, and you all know that. So I got to stay on top of this. And I've called the Federal Reserve, I think, more accurately than anyone else in the world. I've been wrong about the Fed 2 times. Ever. I mean, that's a pretty astonishing record. I'm telling you, this is where this is going to go. Now, let's look at a few other assets here. Let's look at the dollar first. The dollar has got this knee-jerk higher recently. Okay, the Federal Reserve is watching this, believe me, and they do not want to see a stronger dollar. You realize that, right? Their goal here is to create inflation and to inflate themselves, okay, their balance sheet, hyperballooning. We're at $8.5 trillion and counting. It's going to be much, much higher very soon. Okay, so what can we expect? We already understand the Fed has a minimum asset purchase per month. I've gone over this a million times. $80 billion in treasuries minimum per month, $40 billion minimum per month of mortgage-backed securities. This will be increased, okay? I think increased substantially, okay? So that will affect the dollar. The Fed wants the dollar weaker. We all know that, despite the fact that we're seeing inflation surge at its highest pace ever, okay? But according to, Yellowstone Powell, Fed chair, it's contained. I want to know what is contained too, and I'm sure you also would be very curious to hear what would come out of his sewer mouth pie hole, okay? He's a creature. You all know that. Anyway, so with that, we watched gold and silver take a pretty substantial hit on Friday. And to me, people, you know what I'm going to tell you. Major buying opportunity. Bet against the debt. Become your own central bank. You do this by holding a hard asset, silver being the most undervalued asset in the world, in the history of the world today, in my opinion. Please do your own research. Cryptocurrencies have made some kind of crazy turnaround as of late. Bitcoin's back over 45,000, is going much higher. I'm telling you people right now, it's going to be retaking its old high. All those people out there that laughed at me and you all for buying that dip in crypto, how do you feel about it now? Don't you wish you bought that dip too? Duh. Yeah. Makes me laugh when people write to me about this kind of stuff, trying to pick tops and bottoms, listening to some very uninformed YouTube bloggers or people that used to be on YouTube but got kicked off, trying to spew whatever they want to spew out of their mouths. A joke. They have no idea how the market works, no idea what's going on here at all. They don't understand the grand plan whatsoever, which is, the central banks literally taking over the world. Anyway, let's look back at the market real quick. You got the 10-year yield coming up. I mean, what a wild ride with this 10-year yield, people. You got to watch these things. You know that. 10-year yield number one, okay, with regard to the 4 unholy things that we need to watch with this market. Keep your eye on that 10-year yield. When it drops, cash is making its way into the debt market, seeking some kind of safety. When you see it rise like it is now, cash is going to look for places to go. And unless it goes back into the debt market, it's going to go into the stock market, new record highs. Boom, 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 boom. until there's a big sell-off, which is going to happen at one point, but not yet. You all know that. There's going to be a moment of reckoning with regard to the debt market, massive sell-off. The 10-year yield is going to skyrocket. It's going to melt down the stock market. But until that point, we're going to stay on the right side. And I've kept all of you on the right side of this market for years. And I'm very proud of that. So anyway, keep your eye on that. The dollar strength here, keep your eye on that too. So if we get to this market again this week, like I said this morning, is going to be interesting. Expect more bad economic news, abysmal, okay? And more, look here, don't look here. Oh, it could have been worse. You know, it's astonishing what's happening around us. But understanding the mechanism here, the Fed is buying it all. They're going to issue more debt. They're going to buy more debt, increase asset purchases. They have no intention of cutting back these things anytime soon. So forget about it. Stock market's going higher as long as the 10-year yield remains stable. Okay, right now we got a pretty big jump in the 10-year yield. We're at 1.14. Last week we're at 1. Yeah, it had a substantial jump higher now. So I mean, it's pretty insane. What we're watching now, 1.14, I think right now we're at 1.3. I could be off on that just a little bit. That's a big move. The stock market's going to like seeing that. It's not going to like seeing the dollar strength. It wants to see crude oil at least stay where it is or get a bit higher. You know this. You know all this. People, look, I got your back. If you follow this blog, you are light years ahead of most people who understand the market. I mean, I really have you all in the right spots, and I'm going to keep you there as long as you allow me to do that. All right, people, look, I'm going to end this video kind of long. You know what to look at. You know what to look for. I will see all of you in the morning. Love you a lot. Please share the video.